And we're live, and we're going to start recording right now. So, hey, folks, this is another episode just talking about what's going on with the Toronto real estate market. We had Mortgage Jake here, who is really active on Twitter. And one of the big reasons why I wanted to have Jake on was because we wanted to get the sense of what's happening with the Toronto real estate market. Because I'm seeing here that it's still pretty active. I'm not seeing falls in pricing so far. And we're still seeing real estate agents show places. And despite us being on a lockdown or in social distancing and not really supposed to be out and about, people are still showing houses and houses are still being sold and they're still being sold in multiple offers. So Jake, what are you seeing right now in the real estate market?
So Brian, thanks a lot for having me on. We've never really had a chance to talk like this, but we've engaged a lot over Facebook and Twitter and other means. What I'm seeing is, so as a quick backgrounder, I'm a broker. I'm by myself, meaning I don't have a team behind me. So all these numbers are mine and my only. There are no other agents that do deals underneath my name. And that's important because I have a good handle of my data. I do around 240 to 280 transactions a year, but 120 to 140 million a year in volume, mostly in the GTA. I don't do BC, Alberta. I know my Toronto market, my GTA market very well. I will tell you from my perspective, purchases have completely fallen off a cliff. I do on average just about a deal a business day. Haven't seen a purchase in 2 weeks. That doesn't mean they're not happening. That just means that a lot of the clients who were looking at buying may have simply, my pre-approval list of 54 people, out of that list, 5 of them are still active. The other 50 or 49 have simply said, we're taking a break until all of this is passed. It could either be they're taking a break because they want to or because they have to, because COVID has affected their employment. And if COVID affects their employment, they're simply not looking right now. There's a lot of people that I think are going to look with one eye open to see if opportunity comes around. And I think that's a big trigger in my mind is, hey, what if the perfect house comes along? You can't see it. Will you still buy it? That's up to you guys, the realtor community, to figure out a way of, engaging various clauses to protect their purchase. Personally speaking, I have seen a massive free fall in the number of purchases that will happen. I don't think that's going to lead to a free fall in prices because supply is going to crash as well. Because if you're not selling, you're not buying, it's going to just come to a complete slowdown. So that's what I'm seeing. I'm not seeing very much in the way of purchase agreements coming across my table right now. So yeah, things are very interesting in the mortgage market because lenders are starting to cut back on loans. They're starting to cut back on loan to values. They're not being aggressive on any exceptions. Appraisals are changing. Appraisers are only allowed to go from the outside rather than the inside of the property. Lenders are looking at the feasibility of employment. If you're not part of an essential service, they may not approve your mortgage to begin with. So things are really like, if the money stops flowing, I think the market will stop flowing as well.
Now, sorry, did you say that you're seeing that or you're not sure if that's going to happen?
No, that's already happening. So
that's
lenders
already
have
happening.
A couple of dates. So if your mortgage was approved by March 25th and you are with a CMHC lender, so you have between 5 and 19% down, there are 3 mortgage insurance companies, CMHC, Canada Guarantee, and Genworth. If you are within one of those 3 companies and your mortgage is approved already, the government will backstop that lender. They will say, Lender X, Brian's application was approved by this date. You are good to go, even if there's a COVID loss of employment. If you're looking now, and we're now in March 30th, it's not a guarantee anymore. That's first. The conventional lenders, being 20% down or more lenders, they have also adopted that, but that was up until March 27th, where they said, if your deal is approved and the income's confirmed by this date, we are not going to cancel approvals, which is fantastic because think of all those people that bought January, February, March that are closing April, May, and June. Those deals will not start collapsing. And a lot of the housing bears on Twitter, well, when these deals all collapse? That's not going to happen, thankfully. It's moving forward that we may have some uncertainty. I had a decline today of a client who is a full-time actor, self-employed actor, and his wife works as a server at a restaurant. Declined because of employment not guaranteed. Period, end of story. Won't be looking at it at all until they're back to work.
Did they accept an offer? Or was it just a pre-approval to get the process started?
No, they accepted an offer, but it's conditional on financing until this coming Friday. So unless we want to go with an alternative lender or worse, a private lender, that deal will
Interesting.
not get approved by basically any lender because they are not currently working.
Now, are you seeing deals that were conditionally sold previously falling apart where people, they're just afraid of what's going to happen? Their employment's still good, but they're backing out of a deal that was signed maybe a week and a bit ago.
Not at all.
And
No,
not at all.
nothing at all. Not a single client of mine has, or ours has said, I'm not buying this place because I'm just worried that I either overpaid or now I think the market will fall, or I'm not sure about my employment, my assets. What I am seeing a lot of is parents who co-sign or guarantor mortgages suddenly scale back the potential of a gift because their RSPs, their TFSAs have fallen 20, 30%, or parents unwilling to give as big a gift moving forward. So those are the pre-approval people, right? But the people who are approved, who are ready to go, I've not had a single issue. I've talked to my broker friends. Like, we all talk, like, you talk with your successful agents. I talk with my successful broker buddies, and we have a little community going. That's not a trend at all that we're seeing. Is people who have bought, who've committed, who are now firm, are walking away. That's not happening at all.
Mm-hmm. Are you still getting people reaching out to you saying, we're thinking of, but we're not going to do anything as of right now? Or is your 54 list all that you have right now and you're not really getting new people reaching out?
I'm not getting as many new people. It's definitely down, but I'm very active with pre-approvals, new pre-approvals. I got your name from Brian. We're thinking of buying in the fall. Brian, this is what I think is going to happen. This COVID issue will pass. In the scheme of things, it is a blip on our historical radar. It is very hard to live through. I cannot imagine if rates continue to be relatively low. Now, they did go up. We'll talk about that in a minute, but historically low. When COVID goes away, I think the demand surge is going to be so big that the people that have been put on the side, that did not lose their employment, that are just simply taking a break for social reasons or what have you, are just going to simply come back roaring into the market. And as you know, I've been a bull and a bear before. I'm a balanced guy. So I'm not saying that to pump the market up, but I truly think out of those 49 people, 40 of them are still going to want to buy something very soon.
So how long do you think this is going to last, and what your sense is?
I think COVID itself will last 6 months in terms of all of the social isolation, all of the curve flattening, everything else. I think the economic recovery is what I'm most worried about, because we are seeing a lot of temporary layoffs. How many of those temporary layoffs will become permanent layoffs? How long will the airline industry, the automotive industry, the oil and gas sector, to which Ontario is not as exposed, but we are through the financial services arm, how long will real estate take to come back? Real estate takes up around 20, 25% of our GDP. If construction grinds to a halt, how long will that take to come back? I believe it's going to be an 18 to 24 month cycle before things are good again. So it's unfortunate, because the economic collapse that will happen as a result of this is what has me up at night all the time. So
now, are you starting to see that investment properties with tenants? Are you starting to see your clients that own investment properties, that have existing ones, calling you saying, hey, we need to maybe refinance to build a bit of a rainy day fund because we're expecting tenants not to pay rent? What are you seeing on the investment property end?
So on the investment side, two things. One, the majority of my investor clients, almost all of them, have gone to lenders that have home equity lines of credit. And thankfully, we have since then built up a nice reserve of funds available in case of emergency. And two, I'm advising any investor client that is going to face the potential economic shortfall of not having rent, defer your mortgage payment. It's too late to defer the April 1 mortgage payment, because you have to do it usually 5 to 10 days in advance, and it takes a while to get it approved. But I'm telling every investor client, if your rent is not coming in, defer that payment absolutely, or use your HELOC to pay that first mortgage payment if you don't have the savings. Obviously, tapping into savings is the best strategy, but some people may not have that ability. I'm not seeing any investor client call me to say, help, I need a refinance because I can't pay my mortgage because my investors haven't, or my tenants haven't paid me. That is not happening en masse whatsoever. So that's good. That means that there's liquidity in the market, right?
For sure, for sure. I mean, we've had a property since 2008, and we came up for a renewal. I think people were saying they're on hold all day. I mean, we were on the phone 4 or 5 hours just trying to sort that out. I can't imagine how many calls people like you are getting right now on this stuff. So if we need to defer a payment, what do people generally have to do?
So a lot of the lenders now, TD, Scotia, RFA Mortgages, Street Capital, amongst some of them, and I've posted the lists online. I knew that this would happen. So the government came out and said, hey, everybody, we're going to announce this mortgage deferral program through CMHC. So there's a 5 to 19% down borrowers. I refer to them as 5 to 19%. That was the amount of down payment you originally had. If you had a mortgage insurance, you can get your mortgage deferred through your lender through CMHC. If you have 20% down or more, that includes investors, that includes end users who have 20%. Originally, it was call your lender. So start with your branch if you have an active relationship, then call the 1-800 number. Now, Scotia, TD, RFA, Street Capital, and others are heavily encouraging email and online forms. So they're all coming out with service at lender ABC or lenderabc.deferral.com. And that's where you would fill out. And you have to answer the following question. Are you currently employed or unemployed because of COVID? Are you unemployed because of COVID? Are you suffering a temporary layoff? Any change in your financial picture? How long do you think it will last? And so those are the standard questions that I'm seeing lenders ask borrowers. And once they answer those questions, the lender will defer the payment up to 6 months. Defer, not forgive. Add the interest at the end. That may mean your payment will increase in the future because they have to collect that interest moving forward.
Now, I'm on your website right now. Is this the blog post that you posted on March 18th?
Yeah, so at the top here, you'll see the typical questions that they're asking. So this is what you need to know. And I just realized that I spelled call with one L. Sorry about that. And then underneath is all the lenders so far with their phone numbers, including emails. So
this is really valuable.
Scotia online, TD's online. And as I see more, I'm posting more. Frankly, it's hard to keep up, but I am definitely trying to add as many people as I can whenever I get the information passed to me.
So we'll post the link in the description when we repost it later if you're not looking at live, but this is really valuable stuff. So we're seeing here, you need all this information, call in, be prepared to be on hold for a little while. And there's some lenders that are obviously doing it online, like Scotia, like you're mentioning, TD, and so this is really valuable.
And I know as I have one mortgage with RBC, they have an online option as well.
Okay, amazing. Now, are we going to be in a huge, a lot of the real estate bears are saying we're going into a huge liquidity crisis where they expect, the real estate bears, that lending is going to be very tight ongoing. I mean, what's your sense on, I know you kind of mentioned that they're really checking, it sounds like they're being prudent, but it's a little bit different from they don't have enough money to lend out because they're limiting it. What's your sense is going to be happening in the next 6 months in terms of ability to get mortgages once the economy is recovering?
First of all, I have to pause you for 1 second, tell my son what he's got to do. Hold on.
That's okay, we're live.
Okay, so 2008, 2009, the last terrific, event or issue that we had was a liquidity crisis. I just want to be super clear with borrowers. We are not in a 2008, 2009 issue. I absolutely am not seeing any lenders say, we're not lending money, we're out of money. This is an issue moving forward from the ability to fund mortgages. That is not happening at all. What is happening is the cost of operating is going up due to the deferral of the mortgage payments. The income's not coming in. So lender rates are going up. But that's not a liquidity crisis. That's just simply a cost of borrowing issue where instead of 2.29 that we saw a month ago, now we're seeing rates at 299 to 309 as an example. Liquidity to me is there's a run on money and the money's running out. And that isn't going on right now. What there is a run on is lines of credit, business lines of credit, personal. So a lot of the lenders that are having to hold those funds in reserve for in case Brian needs to borrow 50K from your line of credit, let's say. Well, now that line of credit money has to be available to you, the borrower. We're seeing that, but that's not meaning that the bank, CIBC, RBC is running out of money. So I absolutely disagree with that whole liquidity argument.
I mean, what's the worst case that you're going to see in the next 6 months as we're recovering, and what your sense is? Because I'm a little bit more optimistic. It looks like the COVID rates, thank goodness, are trending down what other cities are doing in Ontario with their testing and everything else with the amount of people getting it. We're definitely below what other people are in other countries, and especially when we compare ourselves to US, Spain, and Italy. I hope that continues. I really do. I expect that it will. But what's your sense on the recovery and how that will look for real estate values and mortgages?
Well, my worry is if the United States takes a different plot curve than we do. Remember that whole saying, if they sneeze, we catch a cold? And
Yes.
That's no pun intended right now, but a lot of our trade is so linked closely to the United States health. If we are healthy as people, if COVID passes here faster, if the curve gets flattened faster, that's great. But we rely on China as a big buyer of our supplies, on the US as a big buyer, and on Europe. We need to make sure that the global economy is a lot better. And that's not going to happen until the US recovers, frankly speaking, because they are such a major superpower. That's why I'm thinking an 18 to 24 month curve, because the major drivers of our economy are still going to be behind the 8 ball until the US recovers. That's why I think it's going to take a bit longer than adjust. Things are better. We can now go outside in public with our friends. That doesn't mean the economy has recovered.
So I'm going to put here some Twitter anecdotes that we're seeing right now. We have this real estate agent saying new builds are in trouble now. Just had a chat with a mortgage rep, said Mr. A bought up and needs to sell the close, purchased 1.2 and a house to sell at 800. It's not selling, can't carry both, not good. My answer, sell for $699 or close or walk away and get sued. Are you seeing this, first of all, people who have a house to sell and bought first? Because that was a big thing that people were doing. They were buying first because it was harder, because the market was so good. It was easy to sell your place. Are you seeing a lot of people caught in this problem that this real estate agent's saying?
I'm not seeing people caught in this problem because I stress test a lot of my clients in advance to make sure that if I always go with scenario A, you sell for more than you ever thought. Scenario B, you sell for less than you thought. And scenario C, you didn't sell. What happens? Can I refi your existing place and carry that refinance equity to the new purchase? That buyer here, the problem is that they bought for over $1 million. And the reason I say that's a problem is you can't have less than 20% down if over $1 million. So it's a case-by-case scenario. I'm not seeing this whatsoever, but to the point of that screenshot, Ron Butler is a very good colleague of mine, a very active broker, maybe 10 times more active than I am. And he mentions a really good point. Good luck suing the buyer during a COVID time, during force majeure. So the builder is going to have a really hard time collecting on that. Now that will go through case law for a long time. I'm not a lawyer, so it'll go through the courts for a while, but I don't know how successful that builder will be in suing them. I personally am not seeing people caught in that draft yet, but I do have a few people that are starting to list this week, and we will see how successful their sales are. And this leads me to another kind of sidetrack, but I don't want to forget saying it. If you bought already and you haven't closed yet, say your closing is hypothetically May 15th, if you want a bridge loan, you better absolutely make sure that your buyer is 100% financed, appraised, approved, instructed, and ready to close on your purchase, or that bridge loan will collapse and the bank will be after you really, really big time. So bridge loans are something I'm seeing lenders scale back on. Absolutely.
Really? They're scaling back?
They'll scale a lot of so I had 3 closings last Friday and the lender reached out on Wednesday. Everything's approved, we're ready to go. My files are all complete 10 days in advance always. And on Wednesday, we get an email. Hey, Jake, here are the 3 files you've got. Please reach out to the buying agent and selling agent and answer the following questions. Is the buyer instructed? Are they approved? Are the file conditions clear? Are they COVID? Is their employment subject to COVID? Meaning, are they losing?
So that's a new one.
Yeah, it's a new one. Exactly. I was throwing for So I reached out to you, the selling agent. You reached out to Brian or Todd, the buying agent, and we had a dialogue. And the questions were simple. And all the lender wanted to see was that we did what we could do to show the lender that the buyer of the sale is on pace to doing this. I'm telling these buyers who haven't sold but have bought, try not to get a bridge loan, because it will be harder today to get it approved. And you may not get approved for the whole amount. So you have 400K in equity from the sale, you might get approved for only 200K. And maybe the lender will say, hey, we've given you a bridge loan minus the deposit on offer. Yeah, but the deposit came from my HELOC. Doesn't matter. This is what you're getting. Liquidate your assets. And don't get me wrong, lenders are looking at your assets. They're seeing what they can tap into. Non-RSPs at TFSA's checking, savings, investments, and they're saying, sorry, this is what you're getting. So now you might have to leverage those assets which are down, or leverage parents, siblings, family to lend you the money in the short term. So bridges are a big concern of mine. Buying and selling, buying first, selling second isn't as big a concern of mine, but I don't track the big overall data. And that's an anecdote that she's posting, and I'll post my anecdote. So far, so good.
Okay, let's take a look at this other one from the reporter of the Toronto Star. She's seeing, are you trying to close a home in the midst of a pandemic? Happy to let you vent some stress. Probably not going to be off the record between you and me, of course. Are you seeing people having difficulty closing, or do you foresee more people having difficulty closing because they just can't get a hold of anyone, or everyone's working from home?
No, the banks have done an exceptional job. All of my lenders moving with their business continuity in place, moving everybody offline to home, VPNs, the funding departments, the instructions. I'm not seeing any stress whatsoever. No, let me rephrase. I'm seeing a lot of people stressed out, but because the banks and lenders haven't instituted the 25th and the 27th as the deadlines for deals having been approved for, that should not be a stress moving forward. If your mortgage hasn't been approved yet and you're dealing directly with your bank, it's probably because you have a big penalty and you don't want to leave the lender. At some point, I'm saying to every client, 30 days before closing, let's look at your options if your bank hasn't gotten back to you. Just because right now I'm seeing even my fastest lenders that normally can close a deal start to finish in 5 days need 2 weeks, need a minimum of 10 business days to close a deal. So I know why some people work directly with their bank. I respect that all the time. I say, hey, listen, no problem. I'm your backup option, or talk to a broker as your backup. But it's not because banks and lenders are not getting, or brokers are not getting back to us fast enough, because my lenders, maybe they're taking a day longer. They're not taking 7 days longer, 15 days longer. They're not disappearing into the abyss.
Interesting. What kind of, what do you think she's alluding to or trying to figure out with her angle? What kind of issues that could come up?
Well, listen, because your lender has guaranteed your mortgage to close. So CMHC lender, if you're approved by 25th, you're closing. The lender will close your mortgage on April 30th. But you lost your job. Your stress might be, I bought this house and I'm not seeing any income coming in starting April 30th, even though I bought the place. The lender may not be so willing to defer your payment either, because you're a brand new client. So that's the kind of stress that I think she could be alluding to. The second kind of stress is appraisals are taking way longer. You don't know if the purchase you've bought is appraising on value. You don't know if you need to come up with any shortfall, or appraisal has come in short. You don't know what your backup options are. So those are the two things that I'm thinking of. Or, hey, you were promised rate A. Well, the rates have gone up. The lender didn't pre-approve you, or something happened. Your rate is a little bit higher. Every 5 basis points counts to people. I get that. So that's also a stress that people are worried about. And most importantly, I can't sell to fund my purchase, and people need to sell to buy. That's the biggest stress, I think, next to employment.
Interesting. So let's take a look at another tweet that we have here. Let's see right here. So this is Vancouver House right now.
Beautiful.
Yeah, so only 1 or 2 lights open in this entire condo. Vancouver House is a condo built by the really famous architect Bjarke Ingels.
Yep.
By Westbank. It's in Vancouver.
The Starchitect.
Yeah, the Starchitect behind King Toronto.
Yeah.
Now, what are you finding for vacancy rates in Toronto, and how are you seeing things? Do you see a lot of vacant condos in Toronto just sitting there empty like this in Vancouver?
So this person, I think, is cherry picking. I know this Twitter person. I've engaged with them, and I saw a very similar tweet in the downtown market the other day of all the lights being on in condos at 9 p.m. or a lot of the lights being on in condos. I mean, that's a very nice photo. I'm not seeing any of my clients who own condos saying my tenants have left and shut the doors. Matter of fact, you can argue the opposite is true. So I don't think that vacancy rates in these units are as high as people make them out to be. I don't know which stats are reasonable, but I don't find that picture to be representative at all of the market right now.
I guess it kind of leads into a similar question with Airbnbs in Toronto with Toronto condos. I know personally, people, especially with detached houses, they were making a killing with Airbnb on their properties, like almost 10 times the amount of income that they would get as a regular rental. Do you have any Airbnb stories of what you're seeing right now and how people are going to be impacted with COVID, the flood of rentals that just came on the market this year because we just had a whole slew of completions, and the stuff that was in Airbnb previously entering the rental market? Do you kind of have any Airbnb stories that you're seeing on your end where people maybe restructuring because of that, or people are banking on making money from Airbnb on their rentals or their condos?
I have a couple of clients that reached out to me over the weekend with their Airbnb. They live in the property and they rent out a part of it. So these are homes. I have a couple of active investors who own 3 or 4 rentals each that were strictly looking at the Airbnb market. The condo investors are going to, the ones that I'm working with are absolutely looking at deferral because their bookings have just fallen off a cliff, and they're very worried because what they did was they were relying on Airbnb as a supplementary income until they realized, holy cow, I'm making so much income, I'll just keep accruing more and more properties. I'm scared for those people because I truly think that they're not going to be able to withstand a much longer than 6-month issue if Airbnbs dry up that long. But the home owners, what they're simply doing is converting their basement apartments into long-term. And that Airbnb income wasn't such a big percentage of their income to carry the mortgage. So it's hurting them, absolutely. Every dollar helps or hurts, but it's not hurting them to the point where they're going to have to suddenly rush to sell. So the Airbnb people who own homes or multiple unit properties, I don't think will have as many problems. The condos, listen, if you can still afford to keep it, and it's cash flow neutral and you convert it to a long-term rental, fantastic. You may just have to get income elsewhere that you had in the past. Very many people are employable, so I'm not terribly worried, but if you're relying on that income for you, only that income, it's also really hard. We can't forget, it's very hard to finance a property. So if I have a condo and I'm Airbnb-ing it, it's hard for me to finance that as Airbnb proof and show that to my lender. Because if my lender sees $10,000 a month on a 2-bedroom, $800,000 condo, they might say, well, hold on a second. Is that sustainable? Let's do a market rent appraisal. Let's look at what's really the value here, maybe $4,000 a month. Let's use that to qualify you. So it's not easy for us to refinance properties with Airbnb income. That's also very important to consider.
Interesting. We just got some breaking news here. I want to get your opinion on this. So Crestford, they were going into some problems, some legal issues.
Okay.
And it looks like their condo is going into receivership, and quite likely a lot of these purchasers who bought these condos are going to lose out, and they're not going to get their condo. Their deposits are most likely going to be returned. So it's a big builder, huge condo project, and that means Halo, a lot of their other projects are going to be in trouble at Crestford. So these people are going to get probably these deposits returned if this thing goes to some kind of bankruptcy, and they're going to resell because prices have gone up so high.
Yep.
Yeah. So
but can I say something? Not
yeah.
to the point of this unfortunate situation of the builder, but a lot of people on Twitter are also opining, saying, oh, what about all the people who bought pre-construction? How are they ever going to close their mortgage? Well, guess what? As a mortgage broker myself, I can't get you a pre-approval that meets the guidelines of the builder. The builders are very smart. They're saying to their buyers, I want you to go to a big 5 bank and I want you to get me a firm approval. So I refer to my colleagues at the big 5 banks and I say, hey, David, hey, so-and-so, can you get me this approval? When that mortgage is approved by a big 5, guess what? they do not look into that paperwork. Those mortgages are all closing. Now, will COVID change that strategy moving forward? I'm sure it will. But a lot of these investors who've purchased already from the big and have a mortgage approval on a pre-construction unit closing this year, next year, are all going to be closing no problem. So that's the big comment. In specific to these people who bought these pre-con units, I can't speak to that at any level because I don't engage in that part of the business. So it's unfortunate, right? It's very
unfortunate. It is. I mean, people, the amount of appreciation that we've been seeing in the condo market,
yes.
I could see why people would want to go with it if it's negative $400 a month cash flow, because they know they're making up for it on price growth. What type of opportunities are you going to see in investing as we're coming along with this recovery that we're going to be coming into after COVID?
Well, I always start my own investing mantra is buying worst house on best street theory. So I always primarily look at a multiple unit potential. So a house that can be converted to 2 or 3 units. Again, I'm talking specifically just Jake. I'm not looking at the pre-con market right now, personally speaking. Just looking at houses that I can buy, that I can tie up, that I can put a crew to work, because construction is essential service. Put a crew to work and convert to a 2 or 3 unit home, legal or non-legal, to get my permits ready. That's basically the only thing. The second one is land banking. I'm looking at multiple properties together, combining the lots and then severing into multiple unit family housing, townhouses rather than detached for further density. But I'm looking at it from a 2 to 5 year perspective at least. Not looking at any flip opportunities right now, but I do think that in the distressed market, there might be some chances to get great condos, great units, period, at a very low price if someone has to sell. And I do want to address your point of so many people on Twitter look at capital appreciation versus, cash flow versus capital appreciation. If you're losing $400 a month, you're losing $4,800 a year. If your $600,000 condo went up 2% in value, you've made $12,000 gross, not net. I get it. Taxes get into the picture here. But Brian, you and I have seen, I can tell you, countless people, dozens, hundreds, that see a cash flow negative return, but see a capital appreciation that is so in the positive. If you can withstand that negative return on a cash flow monthly basis, you will do fine. And that's not the way that most investors in the stock market look at things. They look at yield, but the investors in Toronto have been a little different and a little more risk hungry, right? Rather than risk averse.
Yeah, and I feel that you have a choice, really, especially when you're buying condos. You have a choice between cash flow or appreciation, because the areas that get cash flow right away with 20% down are cities that haven't appreciated yet. And maybe you're banking that they're going to appreciate, in the future. But the reason why the price to rent ratio is so good is because those condos just never went up in value.
That's right.
So you're looking for cash flow.
I can buy a condo 3 hours, 2 hours, 5 hours away, or a multiple unit residence that will appreciate with inflation. Yes, absolutely. If you're at that stage in your game where you want cash flow coming in, fantastic at 20% down. In Toronto, usually you need about 30% down to be cash flow neutral. And I'm just not seeing most investors put that sort of down payment. They would rather go 40% on 2 projects than 30% on 1, for example. Not to mention the HELOC growth that we've seen is funding a lot of those down payments and deposits as well.
Yeah.
And the HELOCs keep growing, therefore people have more money to invest.
Yeah, absolutely. I mean, we're starting to see some Toronto builders or builders in general reach out to Toronto real estate brokers like myself, trying to promote these small towns, and the prices that you're seeing are really amazing. But when you do some due diligence, you could still find a single family home with 2 kitchens for about the same price as a new condo in those areas. So
right.
Yeah. So you just really have to do some due diligence on what you're getting into. Will those old houses appreciate in value as much as those new condos? I'm not sure, but case in point, Niagara Falls, the new subdivision houses there went up huge compared to the older stock property. And the reason why is that Toronto buyers were selling their properties in Brampton, and they just would not go to those older areas in Hamilton or in Niagara Falls. And they insisted in getting a Toronto style property and Toronto style subdivision and those properties went up more. So will that trend continue for other small towns? I mean, we have to do some homework on it. So
Yeah.
when you're doing the land banking, are you doing it in the GTA when you're holding lots and you're severing them to increase density?
Primarily GTA because it's the market that we know. A lot of our investor
Yeah.
clients are doing the same thing. Mostly right now in Mississauga, moving westwards, Mimico. A lot of the land banking's been going on westwards for a multiple number of years now, so it's definitely not a new trend. But we're just seeing opportunities in land banking because when you see a lot that's 80 feet wide, you can sever that into two semis, right?
Yeah.
420 wides. It's an opportunity that I'm thinking will play out in the long run when things return back to more normal, because density is the name of the game, and most municipalities are in favor. It's just going to be fighting the neighborhood associations and doing that. But if you have a long window, and that's what I'm seeing a lot of my successful buyers do, and it's working out. So
are they renting out the property while they're going through the rezoning process?
They're converting it to a 2-unit home, whether it's a bungalow, they're making the basement finish, separate entrance. They're investing 50 to 75K, a bare bones reno, if you will, insulating, IKEA kitchen, separate entrance, etc. They're cash flow negative on most of these properties a little bit because their long-term game is, hey, let's just get some income coming in. They're mostly going with alternative lenders as well, rather than the prime lenders. But yeah, they're looking at it from a development perspective. It's a huge opportunity.
Yeah. Where are you typically, I'm seeing that. I'm going to pull it up on the map.
Sure.
A client that just bought this stuff, they're doing it in this area. Let me just get on Google Maps. He's big because you can find these 80-foot lots in like this area, north of Cooksville.
Yeah, Applewood is an area, Lake Promenade area. Yeah, absolutely. There's you can still buy a lot that you can sever. And I'm not a realtor. I don't have a license. Just what I see deals come across my desk. I'm still seeing deals between 700 to 900 for 25 wide lots, or 50 wide lots, and then $1.3 million to $1.5 million for the 80s.
Yeah, this is more the subdivision houses. Right? Yeah, so there's like in this area right here, not the older houses, you do get these big lots.
But south of QE, Mineola, and then east of there, Cawthra, Applewood is also other areas.
Oh yeah, right here.
Lakeview is an area that I've seen quite a few number of buyers buy there because it just makes sense because the lots are so big.
Yeah. And because per credit's so high that it's only a matter of time before Lakeview to start coming up in value. This is a really good area. It's
what's the hydro corridor is being decommissioned. So a lot of the stigma against backing onto a hydro corridor is gonna disappear.
Yeah, absolutely. And look, like we're starting to see them turn into these houses over here, into the mega 2 stories, the McMansions that they call, and right across the street you get the regular lot. Look at these 1.5 story houses, prime for it. I mean, this is like any area in Willowdale or in Etobicoke.
That's right.
Yeah, where they're
and you don't have to buy to sever. You can buy a 50 wide lot and build on it, or you can buy an 80 and build 2 40s.
Yeah. Well, I really appreciate this. Could you believe it? We just blew past a half hour. So let's do this again. Really appreciate it. So if we want to reach out to you, I'm going to put the resources to your blog on the YouTube page. But if we want to reach out to you, how do we do that?
Best way is send me a text, 416-910-4448, or find me on mortgagejake.com. There's a live chat feature. I'll get it on my phone right away. You can reach me, no problem. We can chat. Look, I always offer people the following. Try me once. I'll be a second opinion. I'll tell you anything I know about the market. I'll be straight up with you. If I can help you, great. If I can lead you in the right direction. There's a lot of times a client calls me and I simply say, stick to that offer, stick to that bank, stick with that broker, or you're being told wrong information. Here's the honest truth. Here's where we're at. So at Mortgage Jake on Twitter, if you feel like debating any of our points. Facebook, Mortgage Jake. I'm Mortgage Jake everywhere, except for Instagram. Yeah. I'm Mortgage by Jake, because the Mortgage Jake on Instagram will not sell me his handle, and he's in Hawaii.
Oh, nice. So we're on your website right now. Here's your phone number. There's your little live chat there.
That's it.
Hey, Jake. So we're good to go. So here's the website, and here's the phone number. Give him a text, and we really appreciate you having us on. Thanks so much, sir.
Thank you, Brian. Nice to talk to you.
Appreciate it. Take care.
Take care.